The Federal Reserve cut rates by 25 basis points. There are two dissenters, one wanting a 50 basis point cut and one wanting no change in policy this month or this meeting. So bit of a debate going on at the Fed. I'll go through some of the technicals that are driving some of the major currency pairs after the result. So let's get started. Looking at the euro versus US dollar on the hourly chart, before the decision, the price moved up to that 100-day moving average. Yesterday we moved above it not once but twice. Each of the time the market got above that level, it failed, and today we moved right up to that level. And since the decision, we've started to rotate back down toward the 100 and 200-hour moving averages as the dollar gets a bit stronger after the split vote with the Fed officials, at least on the extremes, with 50 basis point cut and no change. The 100-hour moving average is 1.1636. The 200-hour moving average is 1.1631. So 31 to 36 is that area. If we move below it, it's more bearish. If we stay above it, we're in the battle between the moving averages down here and the moving average up here, with a swing area in between. Let's take a look at the dollar versus yen next, and looking at the hourly chart for this currency pair. We did move down to test the 200-hour moving average before the report, in the earlier New York session. So we did dip below that level not once but twice, and earlier today we also fell below that level. But each time the buyers came back, and with the move to the higher dollar after the report, we're back up testing the 100-hour moving average. Move above the 152.52 would be needed to increase the bullish bias. Then we'll start to look toward this swing area high up here, which has a number of different swing highs coming in between the 153.15 level and 153.27. There's other swing area high up at the 39 level. Ultimately, we're going to need to get above all those levels to increase the bullish bias. If we do find sellers here, then the battle's on in between the 200-hour moving average and the 100-hour moving average of 200. Comes in at 151.97 currently at the moment, and moving higher. I'll take a look at the sterling versus US dollar on the hourly chart. This currency pair moved up and extended back above the 200-day moving average in trading earlier today. And what didn't happen was get back above the double bottom here at 132.47. So what was support here became resistance here, and the market since has rotated back to the downside. Stay below the 200-day moving average is more bearish for the pound versus US dollar. Take a look at the daily chart for this currency pair. This is where we stand right here. The 38.2% retracement comes in at 1.31403. We're currently trading up at 1.3219. So there's a good 60 or so pips away, 60, 70 pips away from that level. But if we are going to go lower, then we would expect to work toward that 38.2% retracement. Let's take a look at the dollar versus Canada next. And this currency pair did fall below the 50% retracement, and also below this swing area here between 138.92 and 139.04. 50% retracement comes in at 1.39028. That's of the move up from the September low right here to the high price that we saw in the month of October. That 50% comes right there at 139.028. The swing area, we are above that level. As long as we can stay above the level, the bias can see the price move back toward the 200-day moving average. Watch the 50% retracement level now for the dollar versus Canada. The dollar versus Swiss franc, this currency pair did trade above the 50% retracement earlier today, and then rotated back down toward the 100, 200-hour moving average, and then moving back up toward that 50% retracement. 0.739 is a level that we have to get and stay above. If we're able to do that, we'll look toward the 0.7986 to 94 level. Let's call it all the way up to the 80 level, 0.800 level for the dollar versus Swiss. Finally, we'll take a look at the Aussie versus US dollar. Taking a look at that on the hourly chart. Ups and downs. We're higher on the day, but the market continues to trade up, higher and lower. Could not extend above the earlier European session high at the high price today. On the move back to the downside, we're back below the 61.8% retracement. I don't know. I don't like it. I don't like the look of the chart. I don't like the up and down volatility. The market's just trying to figure out what it wants to do given the different scenario. As far as the stock market, so we are seeing the NASDAQ index up about 127 points. A new record. S&P index is also higher, but both of those indices are off their highest levels. The Dow Industrial Average is higher yesterday. Since all the major indices closed higher yesterday, they'll all close higher as long as they are at new record levels today as well if they remain positive. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.